5 actually.
Okay.
No
Okay, I see that.
gremlins. No
Okay.
gremlins today.
Oh, okay. I see that you started the recording already. So, okay. So,
Okay, and I'll paste the stuff for you quickly.
yes, please,
You
man.
don't have to
Okay.
worry about that. Okay.
All right. All good.
Thank you.
Okay.
Okay.
Okay. Bye.
Bye.
Right, good morning, students. It's 9 o'clock. Let us get going with today's lecture. Just a few formalities once again. I can see that all the cameras and it's off and all the mics are muted. But just a reminder that you must take notes before the session starts, because that will assist you in making the session much more effective for you. And then at the end of the session, we will appreciate it if you can just give us some feedback. And then also we request you just to complete the attendance register as well. Okay. Right. I think we are ready to go. Just a reminder also that in today's lecture, we'll be covering statements. So it is going to be, the lecture of today will focus mostly on the format that is necessary for you to complete your financial statements. So without any further ado, let us go straight to your notes and let us work through the notes quickly. Right, just as an introduction, at the end of the financial year, when we have got all the information for that particular business for the financial year, and remember the information will be contained in the trial balance. So when we take a look at the trial balance, which will be compiled at the end of the financial year, that trial balance will give you an overview of what has happened during the course of the financial year. So if your trial balance on the 31st December, which is the end of the financial year, will reflect a sales figure of 500,000 Rand, it will mean that during the course of the financial year, all the sales, every month that you posted the sales now to the sales account for the entire financial year, the sales has therefore accumulated to 500,000 Rand. The same with telephone. If you have got telephone in January of 1,000 Rand and in February of 2,000 Rand, and once again in the month of March 1,000 Rand. So at the end of the financial year, you will add up, and this will be contained in the ledger account for telephone. And at the end of the year, you will sit with totals which is equal to the entire summary of the entire financial year. Now, the information in the trial balance is then used to complete the financial statements for the entire financial year. Now, when we talk about the trial balance, in your trial balance, remember, all our ledger accounts will be contained in our trial balance, because the trial balance is a summary of all your ledger accounts. The trial balance, we also divide into two sections. We've got a financial position account section, and this is where we will show all the assets, all the equity, and all our liability accounts. But then we have also got the nominal account section, and the nominal account section, this is where we will show all the income and all our expenses. Income accounts will have credit balances, expenses will have debit balances. So from that now, we are now going to complete our financial statements. As a FAC1501 student, you must be able to do 3 financial statements. The first financial statement is called the statement of profit or loss and other comprehensive income. And that statement is prepared to calculate what is the profit for the year. The second financial statement is called the statement of changes in equity. And the statement of changes in equity is prepared to actually show how the equity, how the capital has grown from the beginning of the year to the end of the year. So we want to know what is the value of equity or capital at the beginning of the year, and what is the value of equity at the end of the year. That is the statement of changes in equity. The last financial statement is called the statement of financial position. The statement of financial position is prepared to show you what is the list of the assets, the list of the equity, and what is all in your liability accounts. And in the end, the statement of financial position is prepared to prove that assets is equal to equity plus liabilities. So the first financial statement that we are going to engage with is the statement of profit or loss and other comprehensive income. So we focus quickly on the format of that financial statement. So if you prepare the financial statement, the name of the business on top, and the heading statement of profit or loss and other comprehensive income for the year ended. It's always for the year ended, because we are going to bring into account income and expenses for the entire year. So this statement starts off with your revenue, and your revenue is equal to your sales minus your sales returns minus your settlement discount granted, and that will give you the amount of revenue. You show these amounts here in brackets so that we can see where the answer is coming from. So it starts off with revenue minus cost of sales. Now, cost of sales is a calculation. So let us take a look at the calculation for cost of sales. Cost of sales is therefore equal to the opening inventory, which is the value of inventory at the beginning of the year, plus your purchases. Now we are looking here for the net purchases. Now net purchases is equal to the amount of purchases minus your purchases returns minus your settlement discount received. That will give you your net purchases. Then you will also add into this now, part of your cost of sales will be all the costs that you have incurred in buying the stock and getting the stock to your premises. It may include items such as import duties, carriage on purchases, or freight on purchases. All of those costs will be added onto your cost of sales amount. And then finally, we will subtract our closing inventory. And closing inventory is the value of your closing inventory at the end of the financial year. So what you do is, you must know how to calculate your cost of sales. Very important. So let us just go through that. Cost of sales is equal to your opening inventory plus your purchases plus all costs that you may incur in getting the stock to you, whether it is import duties or carriage on purchases or freight on purchases, minus the closing inventory. You put that in a block, and that is your cost of sales calculation. So you have now calculated your cost of sales. Whatever is in the block, that is your cost of sales. Now we can calculate what is the gross profit at the business. Gross profit is also called our trading profit, and trading profit is the difference then between revenue and your cost of sales. So you will take your revenue amount minus your cost of sales, and that will give you then your amount then of your gross profit. So just to complete the section and your understanding of this now, we are going to the notes, and we are now onto page 3 of your notes. And in page 3 now, on page 3, there is a trial balance. This is the trial balance of Fallon Traders taken on the 28th of February 2019. We are going to do the statement of profit or loss and other comprehensive income. The purpose of doing a statement of profit and loss and other comprehensive income is to calculate what is the profit for the year. The profit for the year, we are going to work with income and expenses. Income and expenses falls under the nominal account section. So we are going to work with the accounts here in your nominal account section. Right. I want you now to take the information and complete for me the statement of profit and loss and other comprehensive income up until the calculation of the gross profit. Please take note that your closing inventory will appear in your additional information, because the value, your additional information tells you that the value of the stock on the 28th of February 2019 is 28,300, and that is your opening inventory. I'm sorry, that is your closing inventory, the value of closing inventory, the value of your inventory at the end of the financial year. If you want to know what was the value of the inventory at the beginning of the financial year, inventory classified as an asset will appear under your financial position accounts. So go to your inventory and you will see that the opening balance of inventory on the 1st of March 2018, that was 55,000. I want you now to take that information now and see if you can complete for me the statement of profit and loss and other comprehensive income up until the calculation of the gross profit. I will give you a few minutes just to complete that for me. Right, students, I am going to put up the solution now up until that stage. If you've got a question, any problems, just unmute your mic, please, and then you can just ask that question. So let us take a look at the completion of the statement of profit and loss and other comprehensive income up until the calculation of your gross profit. So our revenue amount, remember now the revenue amount is the sales amount, 444,000, minus your 4,600 Rand, and the 4,600 Rand, if you go to the exercise and you go to the 12 balance, you will see that the 4,600 is your amount of sales returns, minus your settlement discount granted of 800 Rand, and that will give you net revenue, and your net revenue is the amount of 438,600 Rand. Revenue is equal to your sales minus your sales returns minus your settlement discount granted. We go over to our cost of sales. To calculate your cost of sales is equal to your opening inventory, and your opening inventory, the value of the inventory on the 1st of March was 55,000. To that, you're going to add your purchases. Your purchases, once again, we are interested in our net purchases. The net purchases is equal to the purchases of 223,040. 223,040 as per the actual question, minus your purchases returns. Your purchases returns was the amount of 1,200 minus settlement discount received of 340 Rand, and that will give you a purchases amount. Then the net purchases, and your net purchases is 221,500. Now you look for all costs that you have incurred in getting the stock to you. In this exercise, there is only carriage on purchases. Your carriage on purchases is the amount of 4,300 Rand. Subtract your closing inventory. Closing inventory, the value of stock at the end of the financial year, and the value of that stock you will get under your additional information, and your closing inventory amounted to 28,300 Rand. And that is your cost of sales calculation. Opening inventory plus purchases plus carriage on purchases minus your closing inventory, and that is going to give you a cost of sales figure in brackets 252,500 Rand. And we are now onto the calculation of the gross profit. The gross profit is therefore revenue, the amount of revenue minus the amount of the cost of sales, and that will give you a gross profit, and the amount of the gross profit size is therefore 186,100. Revenue minus the cost of sales will give you then the amount of the gross profit. Any questions up to this stage? Right, we are back onto the formats now. We continue now on page 1 of your notes. We are onto the formats now. The statement of profit and loss and other comprehensive income. After your gross profit, you've got a heading called other income. Now, under your other income, remember we are working with our nominal accounts. Look for all the all the nominal accounts with credit balances, that will reflect your income accounts. So you will indicate there in this business whatever income you've got. You may have rent income, put down the amount. You may have profit on sale of asset, put down that amount, or credit losses recovered, or interest on fixed deposit. Whatever income you've got there from your trial balance, you indicate those income accounts. You put that into a block, you add it up, add up, and that will give you your other income. Now you will sit with your amounts of your other income. Now we're going to deal with our expenses. Under your expenses, remember, it's now the nominal accounts with the debit balances. We've got two groups of expenses. We've got distribution, administrative, and other expenses, and we have got finance costs. Under your finance cost will go your interest. So it could be interest on loan, or it could be interest on overdraft. Interest on loan or interest on overdraft. All the other expenses you list down as distribution, administrative, and other expenses. So whatever you've got there, indicated there, you may have stationery, or you may have salaries and wages, or you may have advertising, or you may have water and electricity. Whatever you have got there, you may have bank charges, you may have donations, all the expenses that you will incur, you will list down under your distribution, administrative, and other expenses, except now for the interest. Remember that. You will block all of your expenses, you add it up, and that will give you your total of distribution, administrative, and other expenses. You bring into account now your finance cost. Bring into account now your finance cost. Your finance cost will consist of, and it can consist of the following. It can consist of interest on overdraft or interest on loans. So all you do is go to your trial balance once again, look for interest on loan or interest on overdraft. If there is, you list it there, you add it up, put it in a block, and that is the total then of finance cost. Right. To conclude the statement of profit and loss and other comprehensive income, you must calculate the profit or the loss for the year. So to calculate the profit or the loss for the year, you will take your gross profit amount, add your other income, subtract your distribution, administrative, and other expenses, and you subtract your finance cost, and you will get an answer. So once again, first calculate the answer here now to your statement of profit or loss and other comprehensive income. That answer, once again, it is the gross profit plus your other income minus your distribution, administrative, and other expenses minus the finance cost, and you will get an answer. If that answer is positive, you label it as the net profit for the year. If, however, your answer comes down to a negative amount, then you will label it as the net loss for the year. So you first get an answer, and then you will see whether it is a profit or a loss. So students, I want you now to take the additional information or the information into the activity that we are busy with. The information is on page 3. Take all of that information into account and complete for me, please, then the statement of profit or loss and other comprehensive income, and calculate there what is the profit or the loss for the year. If any of you have got a question, you can also post it for me at the stage. Right, students, we continue with that now. I'm going to complete now the statement of profit or loss and other comprehensive income. So if I take a look at the information now from my exercise that I'm busy with, remember we completed everything as far as the gross profit is concerned. My next heading is other income. Go to your exercise now. We are looking for income accounts. Remember, income accounts is our nominal accounts with the credit balances. The sales is the first nominal account with a credit balance, but we have already accounted for sales in the calculation of the gross profit. And the same applies now to your purchases returns. The first income that we've got is your rent income with a balance there of 24,000 Rand. The next account on the credit side, the income account there with a credit balance is the settlement discount received, but we have accounted for that already because we subtracted that from purchases, and the only other income account that we do have is our interest on fixed deposit, which amounted to 12,000 Rand. We block that. That's the only incomes that we've got. And our total income then amounted to 36,000 Rand. Our next heading is distribution, administrative and other expenses. Remember, all our expenses will go under distribution, administrative and other expenses, or finance costs. Finance cost is only for interest on loan and interest on overdraft. Right. We take a look now at the nominal accounts with debit balances. I'm going down the list now. Purchases and purchases returns, purchases, carriage on purchases and sales returns. We've worked with that already in the calculation of the gross profit. My first account that I see there is salaries and wages. So your salaries and wages expense for the year amounted to 123,000 Rand. Next one is your telephone expenses, and telephone expenses amounted to 9,600 Rand. Your next one that you see there is interest on mortgage loan. Remember, interest on mortgage loan must now appear under your finance costs. So your interest on the loan is 16,800. Put that under your finance costs. The next one is settlement discount allowed of 800 Rand. That has been taken into account already. Our next expense is our bank charges. Our bank charges amounted to 2,400 Rand. Next expense is your stationery expense, which amounted to 3,600 Rand. The next expense that you will have there is your expense now for insurance. Your insurance for the year amounted to 8,400 Rand. And your advertising, which is your next expense, amounted to 6,500 Rand. We have now accounted for all our expenses, either under distribution, administrative and other expenses, or under finance costs. Okay, just hang on. Right, have I got a question somewhere? Baden?
Sorry, hi, good morning.
Good morning.
I didn't see you add stationery under distribution and administrative and other expenses, right?
Okay, let me just quickly see if I did that. It is supposed to be there.
6,300, sorry. 3,600.
Yeah, just hang on. Let me just see whether I've
there.
got.
Oh,
It
it
is there?
is there. Sorry. No, it's sorry. You just said, just because you said it's the first one, and stationery was the first one on this list, so I got a bit confused. Sorry. Apologies.
Okay, all good?
Yep.
Okay. So my distribution, administrative and other expenses consist therefore of salaries and wages, telephone, the bank charges, the stationery, insurance, and the advertising. I add all of that up. And if I add that, put the amount in brackets because it must be subtracted. And your expenses amounts now to 153,500 Rand. That's all our distribution, administrative, and other expenses. Our finance costs consisted only of one item. It has been blocked. You block it up like that. You put it in a block, and the total amount there is 16,800 Rand. And now we've got our four answers. We've got gross profit. We've got our total amount of other income, 36,000. We've got distribution, administrative, and other expenses. And we have got our finance cost. That is our four headings. So now we want to calculate what is the profit or the loss for the year. So you take the gross profit of 186,100 plus your other income of 36,000 minus your distribution, administrative, and other expenses of 153,500 minus your finance cost of 16,800. Your answer that you will get now is an amount of 51,800 Rand. And because that is a positive amount now, we will label that therefore as the net profit for the year. So our net profit for the year, 51,800 Rand. And that concludes our statement of profit and loss and other comprehensive income. Right, any questions on that statement? Belinda Koosle, can you please just mute your phone, or have you got a question for us? Belinda Koosle, can you please mute your mic for us, please? Any questions? Thank you. Right, we're moving on to our next financial statement. So back to your notes. In your notes, go for me to page 2 of your notes. And our next financial statement that we are going to deal with is called the statement of changes in equity. It's quite a small statement, as you will see there. Only this part over here. So once again, name of the business on top, statement of changes in equity for the year ended. What is the statement of changes in equity focuses only on what has happened to the capital. So we want to know what is the value of capital at the beginning of the year. Add or subtract a movement. I will explain a movement to you guys now. You add your, if you have made a profit for the year, you add that in. So this is coming from your statement of profit or loss and other comprehensive income. Or if you have made a loss for the year, as calculated in your statement of profit and loss and other comprehensive income, indicate the loss there, subtract your drawings, and your final answer is then called the capital balance at the end of the year. So let me just quickly explain to you now what has happened. And I want to explain to you now what is all contained under the movements. And for that, I'm going to give you an example. If I now say I give you information and I give you a trial balance, which is dated the 31st of December 2019, and there I have got a capital balance. In my trial balance, capital has got a credit balance here of, say, 300,000 rand. I will give you additional information. And in my additional information, if I tell you that the owner increased his capital on the 1st of September 2019 by depositing a check for, he deposited a check for 60,000 rand into the business's banking account. And how are we now going to deal with this? Okay, so if I have got I can just give you guys a timeline here, some sort of a timeline that I will have here. Okay, and I tell you now, okay, my financial year has started on the 1st of January 2019. And my financial year has ended on the 31st of December 2019. So that is my financial year. So if I tell you, I just want to get this right quickly here. No, it's not going to work. Right. And on the 1st of, or on the 31st of December 2019, my trial balance is telling me that the balance of capital is an amount of, this is 2019, the end of the financial year. And at the end of the financial year, my capital balance is the amount of 300,000 rand as per trial balance. Now, during the year, there was a transaction, and the transaction stated that on the 1st of September, the owner increased his capital and he has given an additional amount of 60,000 rand. So if the closing balance is 60,000 and he contributed, if the closing balance is 300,000 and he contributed 60,000 rand during the course of the year, then you must know that there was an opening balance therefore of 240,000 rand. So on the 1st of January, he started off with 240,000. On the 1st of September, he added another 60,000 rand, and that is why the balance at the end of the year is now 300,000 rand. So if you must now do the statement of changes in equity of this exercise now that I am busy with, you are going to start with your statement of changes in equity, and you are going to have now the capital balance at the beginning of the year will be 240,000 rand. And you're going to add a movement. And if we are going to add the movement, remember now, the movement refers to increases or decreases during the course of the year. So we will now have an addition of 60,000 rand. And that is how we are going to bring into account now the information in your statement of changes in equity, if there were any changes during the course of the year to the amount of the capital. So the movements will refer to additions or withdrawals of capital during the course of the year. So if you start with your statement of changes in equity, you must have your capital balance at the beginning of the year, plus any movements, plus the profit or the loss for the year, minus the drawings, and that will give you the final answer then of your capital. That will give you your capital balance at the end of the financial year. So I want you now to take the activity that we are busy with and complete for me the statement of changes in equity. Are there any questions on the movements? The movement always sometimes gives some problems to the students. If nothing, can I ask you please to go to the activity that we are busy with? And I want you to complete for me then the statement of changes in equity.
Sorry, sir. Excuse me.
Yes, okay.
Where do you obtain the balance for the drawings from?
Right. Go to your trial balance. Remember, drawings is an equity account. And because
Okay.
it's an equity account, it will appear under your financial position accounts on the debit side.
Financial position accounts.
All good, Baden? It's normally the second one.
Oh, okay. Okay. Thank you.
Right, let us take a look at the solution then. The capital balance at the beginning of the year in this activity is an amount of 280,000 rand. Remember, we had no movements during the course of the year. If there was any movements, it would have been shown under your additional information. So we don't have any additional information telling us that there were any increases or decreases to the capital, which means that the capital balance has remained constant during the course of the year. So the 280,000 rand that you see in your trial balance is therefore the opening balance of your capital, the value of capital at the beginning of the year. Next, you bring into account the profit for the year. And the profit for the year, as calculated in your statement of profit and loss and other comprehensive income, amount of 51,800 rand. You bring into account the drawings for the year, and the drawings for the year as per trial balance. The drawings for the year has accumulated to 20,000 rand, leaving you with an answer, the capital balance at the end of the year, 311,800 rand, and that is your statement of changes in equity. Any queries on the statement of changes in equity? The purpose of the statement of changes in equity is just to show you how the equity, the capital, has changed from the beginning of the year to the value at the end of the year. Right, we move on to the last financial statement. And the last financial statement that we are going to deal with is called the Statement of Financial Position. So we go back now to your notes, page 2. Let us just go through the format of your Statement of Financial Position. In your Statement of Financial Position, remember, we want to list all our assets, all the equity, and all our liability accounts. The first focus is on your assets. Your assets consist of non-current assets, so you will have non-current assets and current assets. Those are the two categories of assets that we do have. Under your non-current assets, there are two categories: property, plant and equipment, and other financial assets. Under your property, plant and equipment will resort the buildings, the land, the vehicles, your equipment, your furniture, your machinery. All of those items will fall under the category of property, plant and equipment. So when you must do now the statement, you will now in brackets here calculate what is the value then of your property, plant and equipment. And I refer you to note number 1 at the bottom, where I've explained to you that property, plant and equipment is equal to the value of your land and buildings, and normally that will be at the cost price, plus any other property, plant and equipment. It may be machinery, equipment, vehicles, furniture, shelving, and all of those things you will show at the carrying value. Carrying value is equal to the cost minus accumulated depreciation. The carrying value, accumulated depreciation, and depreciation, that will be explained to you in the following lecture. So next week, we will discuss all of those things. At this point in time, you must just know that the property, plant and equipment, you will show land and buildings at the cost price, and then all the other items at the carrying values. Your other financial assets will consist of your fixed deposits or investments, which is of a long-term nature. That is why they fall under your non-current assets. So you get the answer for your property, plant, and equipment. You get the answer for your investments or your other financial assets. You add that, and that will give you your amount of non-current assets. Under your current assets, there are 4 categories of current assets: inventory, trade and other receivables, prepaid expenses, and cash and cash equivalents. That will make up the 4 categories for your current assets. Once again, I refer you to the note at the bottom, the inventory. Inventory will refer to, or inventory will include, your closing inventory, and closing inventory will refer to the value of your stock at the end of the financial year, your merchandise, plus any other consumable inventory that you've got on hand, such as you may have stationery on hand or packing material on hand. Now that is part of our inventory because we take those items into the new financial year. So you add consumable inventory onto your closing inventory of the stock, and that will give you the amount of your inventory. Your next heading is your trade and other receivables. Trade and other receivables will consist, I've got it for you there under number 3. It is the trade receivables minus allowance for credit losses plus any accrued income. Now, allowance for credit losses and accrued income are some of the adjustments that I will explain to you in our next lecture. So at this point in time, you must just remember that your trade and other receivables will consist of your trade receivables amount. Still under your current assets, you will have prepaid expenses. Prepaid expenses is also one of the adjustments that I will discuss in your next lecture. And your cash and cash equivalents. Under note number 4, I've got the explanation for cash and cash equivalents. Cash and cash equivalents will consist of the bank, the petty cash amount, and the cash float. So you've got the 4 amounts now for your current assets. You've got inventory, trade and other receivables, prepaid expenses, and cash equivalents. You put that in a block, you add it up, and that is the amount of your current assets. The top part of your statement of financial position is now called total assets. And to get your total assets, you will get now the amount of your non-current assets plus the amount of your current assets, and that will give you your total assets. And that, students, is what we call the top part, the first part of your statement of financial position, only dealing with the assets. I want you now to go back to the activity that we are busy with and see if you can complete for me the asset section, only the asset section of the statement of financial position. The information is the activity on page 4 of your notes. I'm sorry, page 3 of your notes. Use that information on page 3 and complete for me only the asset section of the statement of financial position. Right, students, let's take a look at the solution of that section. Right, the statement of financial position, once again, the name of the business on top. And please note that the statement of financial position, the heading, it is indicated as at. Whereas the other statements will always speak about for the year ended. But the statement of financial position is drawn up at a particular point in time, and the value of the assets and the liabilities can change at any time. Therefore, your heading for your statement is as at. So as at the 28th of February 2019, which is the end of the financial year, this is the time at which we are listing all our assets, equity, and liabilities. The first heading is called our assets. Then you will have the assets. Then we're going to take a look at our non-current assets first. Your non-current assets consist of property, plant, and equipment, and a fixed deposit. In our activity, the property, plant, and equipment will consist of a building of 360,000, plus we will have equipment of 90,000 rand, and we are also going to have a vehicle of 185,000 rand. You add all of that together, and that will give you property, plant, and equipment amounting to 635,000 rand. We have got a fixed deposit to the amount of 60,000 rand. Those two items we will put into a block, and our non-current assets in total is therefore the amount of 695,000, consisting of property, plant, and equipment, and our fixed deposit. Our next heading is your current assets now. Current assets will consist of, there's 4 categories of current assets. Always just put them down, then you can just fill in the stuff later on. So the amount you can then just fill in later on. So our current assets will consist of inventory, trade and other receivables, prepaid expenses, and cash and cash equivalents. The inventory will consist of our closing inventory, since we haven't got any other additional information that we've got any consumables on hand. So our closing inventory will be the amount of 28,300 Rand. Our trade and other receivables at this stage with the activity that we have got and that we're dealing with, we don't have any other further information. So our trade and other receivables will only consist of our trade receivables of 28,000 Rand. At this stage, we've got no prepaid expenses, and our cash and cash equivalents is the amount of the bank now, 43,500 Rand. Remember, cash and cash equivalents can consist of bank and petty cash and a cash float. But in this activity, we've only got a bank with a debit balance. So our cash and cash equivalents is the amount of 43,500. We block all of that, put that all into one block. And our current assets, therefore, is the amount of 99,800 Rand. So the top part of our statement of financial position, where we show all our assets, we want to know what is our total assets. And total assets is therefore the amount of non-current assets, 695,000, plus the current assets of 99,800 Rand, and that will give us total assets. And our total assets is the amount now of 794,800 Rand, and that is the top part of our statement of financial position. Any queries, guys, on the top section, the asset section, consisting of two sections or two parts, our non-current assets and our current assets. It looks like everybody's okay with that. We continue with our statement now, and we are going to do now the bottom section of the statement of financial position. The bottom section of our statement of financial position is called equity and liabilities. So your heading is equity and liabilities. First, you want to talk about the equity. Next heading is equity. Under equity will fall your capital. Now the capital, you want to know what is the value of capital at the end of the financial year. And the value of capital at the end of the financial year have already been calculated in your statement of changes in equity. So you go to your statement of changes in equity, get the value of capital, the balance at the end of the year, and that is the value of capital that you will put there. Put it into a block, and that will be your amount of equity. So the equity consists of capital, and capital has been calculated in your statement of changes in equity. Now we're going to speak about our liabilities. We get two categories of liabilities. We get non-current liabilities. Remember, the non-current liabilities is our long-term liabilities. It's of a long-term nature, what needs to be paid back in more than 12 months. And we will also get current liabilities. Current liabilities will be your short-term liabilities. Your non-current liabilities will consist of what we call interest-bearing borrowings, which is our long-term loans or our mortgage loans. And you will put those amounts down there. You will block it, put it in a block, add it up, and that will be our non-current liabilities. Your current liabilities will consist of three sections over here, or four sections. We first of all will have trade and other payables. trade and other payables, and that we will explain by note number 6. Trade and other payables under number 6 will consist of your trade creditors or your trade payables plus any accrued expenses. Accrued expenses, once again, is one of those adjustments that I will deal with in our next lecture. So at this point in time, your trade and other payables will only consist of your trade payables. Income received in advance, adjustment that I will explain to you later on. And then we've got financial liabilities. But you can replace that financial liabilities there, the heading here, with, just to make things easier for you, you can call that bank overdraft as well. Now remember the bank balance. It can be a debit balance or a credit balance. If your bank account has got a debit balance, it means that bank is an asset. If, however, your bank account has got a credit balance, then you are owing the bank money. And because you are owing the bank money, the bank is then classified as a liability. So whenever you do a statement of financial position, you must first look at the bank. And if the bank is indicated as a debit balance, then it's part of your assets under your current assets and under cash and cash equivalents. That is where bank will resort. If, however, your bank account has got a credit balance, your bank account is overdrawn then. You are owing the bank money, and then bank is classified as a liability. So you will show it under your current liabilities then. We continue. So your current liabilities consist of trade and other payables, income received in advance, and a bank overdraft. You may also have the current portion of interest-bearing borrowing. So I am going to explain to you quickly what is meant by the current portion of your interest-bearing borrowings. So let us just get back to the worksheet over there. And I'm now going to explain to you what is happening with interest-bearing borrowings. Right. If I have got the following information, I give you a trial balance. And this trial balance is dated the 31st of December 2019, which is the end of the financial year. And in this trial balance, I have got an account called mortgage loan. And the mortgage loan is an amount of 300,000 Rand. So I am owing 300,000 Rand on my loan. I've got additional information, and my additional information tells me the following. Mortgage loan must be repaid in 5 equal annual installments. On the 1st of July in the year 2020. That is the information that I have got now on this loan. Now let us discuss this further. We've got a 300,000 Rand loan. It must be paid back in 5 equal annual installments. Therefore, each payment will be equal to 60,000 Rand. Take the 300,000, divide by 5, and you must pay it back. So each time you must pay back 60,000 Rand. Your first payment will be on the 1st of July in the year 2020. Then you are going to pay 60,000 rand. Your next payment is on the 1st of July 2021. Then you pay back another 60,000 rand. Your next payment is on the 1st of July in the year 2022. And then you will pay back another 60,000 rand. And you will make two more payments on the 1st of July 2023 and 2024, and then the loan is paid up. Let us focus on the first payment on the 1st of July 2020. The 1st of July 2020 is 6 months into the new financial year. Now, your financial year ends on the 31st of December 2019. Within the next year, within the next 12 months, you must make a payment of the loan, and you must pay back 60,000 rand. And because you must pay the money back, or you must pay back a portion of the loan within the next 12 months, that cannot be long-term anymore, because less than 12 months will fall then under the category of current liabilities, because you've got a commitment to pay back 60,000 rand within the next financial year, within the next 12 months. So when you do your statement of financial position, and you are going to indicate what are your liabilities, then you will state now, as far as this example is concerned, under the heading non-current liabilities, you will state that you have got a mortgage loan, but the value of your non-current liabilities will be 240,000 rand. And you are going to have a current liability. Under your current liabilities, you will indicate that you have got, as part of your current liabilities, you have got the current portion of your mortgage loan, and the current portion will be 60,000 rand. So if you have got if you must do the statement of financial position, and you are sitting with a long-term loan, a non-current liability, and a portion of that amount must be paid back within the next 12 months, within the next financial year. It is not long-term anymore. It becomes short-term, and therefore you will show it under your current liabilities. So your loan, in my example of 300,000, will consist of a short-term portion of 60,000 rand and a long-term portion of 240,000 rand. Back to our notes now. I am busy with my liabilities now. So, in my statement of financial position, I will now have non-current liabilities. I've got current liabilities. Current liabilities can consist of my trade and other payables, income received in advance, bank overdraft, and the current portion of my interest-bearing borrowing, which is the short-term portion of my loan. I block all of that, add it up into my current liabilities. The bottom section of my statement of financial position is then called total equity and liabilities. Total equity and liabilities will consist of my three headings now, which is equity, plus your non-current liabilities plus your current liabilities. You add those three amounts together, and that will give you your total equity and liabilities. Total equity and liabilities, that will be then the answer to the last section, the bottom section of your statement of financial position. Students, I want you now to conclude that activity by completing the statement of financial position, only the bottom section, and I will give you 4 minutes just to complete that for me. Right, students, we are running out of time, unfortunately, so let me just quickly wrap this up and let me just complete this for you. I'm busy with the bottom section now of my statement of financial position. My first heading is equity and liabilities. Under my equity and liabilities, I will have capital. And the capital, remember, we have calculated the capital amount already. The capital amount has been calculated in my statement of changes in equity, and my capital amount in my statement of changes in equity, we have calculated to be 311,800 Rand. And that is also my amount then for my equity. So my equity will amount then to 311,800 Rand. I've got non-current liabilities. Under my non-current liabilities, I've got a mortgage loan. And my mortgage loan, my long-term loan, is the amount of 450,000 Rand. Remember, we've got no information of anything that needs to be paid back within the next financial year. That will normally appear under my additional information. We've got nothing of that. So I will put that into a block, and my total of my non-current liabilities is 450,000. Your next heading is your current liabilities. In this activity, under your current liabilities, your current liabilities will consist of trade and other payables. And your trade and other payables will consist of your trade payables control. And your trade payables control in this activity is the amount of 33,000 Rand. R33,000, trade and other payables. We will block that, of course. And our current liabilities is then the amount of 33,000 Rand. The bottom section of our statement of financial position, the bottom section is then called total equity and liabilities. Total equity and liabilities. So it will be equity of 311,800 plus the non-current liabilities of 450,000 plus the current liabilities of 33,000. That will give you the bottom section of the statement. So we will take the equity, non-current total, current liabilities total, and that will give you your total equity and liabilities. Add that up, 794,800 Rand, and 74,800 Rand is then the bottom section. And remember that this amount must be equal to the asset section. So if you just scroll up now to the asset section of the statement of financial position, 794,800, and the bottom section must also be equal to 794,800, and that will be our statement of financial position. Right. Students, in this section or today's lecture, the focus was more on the actual formats, the formats of your financial statements. 3 financial statements: statement of profit and loss and other comprehensive income, statement of changes in equity, and the statement of financial and the statement of changes in equity. Those are our 3 financial statements. The information that it will be supplied to you is you will get a trial balance, and from the amounts in your trial balance, you must then complete your financial statements. So that will conclude our session then for today. Our next lecture is then scheduled for next week, Saturday, again at 9 o'clock. And next week, Saturday, will be the 9th of October. You will get your, I'm sorry, the 10th of October. Say by Monday, I will upload the notes then for that lecture. Any queries before we close off? Right, if not anything, guys, enjoy the rest of the afternoon. Goodbye.